This video is brought to you by Blue Guardian, the prop firm that lets you trade with EAs or any style you like at any time. Okay, so after interviewing Al Brooks, there was one thing that really stuck with me. It was his buy the close strategy. So what I've done is taken that, thrown it into my robot lab and brought the community together, and we've all come up with a strategy to trade this buy the close approach. And what you're going to see today is how it's performed in backtests in the early demo stages, and then it did so well we actually chucked it on a Blue Guardian 100k challenge to see if it could pass that. So folks, you're going to get to see all of that in the video coming up. And look, some of the backtests were crazy, like this one here where it did over $6 million in 10 years. All right folks, let's hear from my sponsor Blue Guardian and then get on with the show. Our sponsor Blue Guardian funds their traders with up to 400k and allows you to get your first withdrawal and refund after just 14 days, giving you a serious edge. With hundreds of positive reviews on Trustpilot, 4.8 stars, and a Discord of 15k active members, Blue Guardian is one of the most trusted prop firms in the industry right now. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation. So first things first, let's have a look at Al's buy the close strategy. So he mentions it in this video I shot with him. So let's dive in and have a look at that now.
Wow, that's one of those buy the close rallies Al's talking about. I got to buy. Another big bull bar. I got to buy. But that's a bigger bar, and it's at the high from a couple of days ago. So that'll attract some profit taking.
Right, so that is a kind of a simple strategy, right? And what we had to do was find an entry criteria for that. What we decided on was something that one of the members, Warren, suggested, which was a retracement approach that he'd learnt from some other mentor somewhere, which was pretty simple, right? So you're looking for a number of bars going the opposite direction of price. So let's say 3 bull bars, and then you're looking for an engulfing bear, get in at the end of the engulfing. So a bit of a retracement kind of approach. There's moving averages in there as well. So that's what we used to start off with the strategy, but we ended up finding out that that didn't work very well. And in fact, what we did was we flipped what we had and turned it into a momentum-based strategy where we just took a certain number of bull or bear candles and called that momentum. Once we had that, then we started entering the buy the close strategy. So every close of a bull or a bear, we'd just enter. So what does that look like when you're actually running it in the markets? So we had our entry signal up here for our first trade, and we took that buy trade there, which is at the close. It is a little bit higher, you can see that, but that's just the way that we're backtesting on 1 minute data and not every tick data. So as we went along, you can see here, every single bull candle, we're looking to buy that. We don't want to trade across the high spread area, which is the start of the day, so we didn't buy those bulls there, but we carried on buying all the way up until we had 20 trades in, and we didn't want to do any more than 20 trades. We could have actually set it to trade 50 trades if we wanted to, but it's set to 20 maximum, and at that point we stop buying the bulls and we look for our target, and at the target we get out of everything. Now this is great when it works and not so great when it doesn't. So we're going to dive in to see some back tests, how they performed, and what we ended up doing to make this thing work across every market. Okay, so while this GJ test here looks phenomenal with its $6 million run, in fact, it wasn't ever going to be sustainable going forward, and we don't really want to suffer through humongous drawdowns like this one here and this one here of a few million, right? So we want it to be a bit more stable, a bit more conservative, and get us growth in the account on a regular basis. So how do we do it? What we did was we tested it across 10 years and 30 markets. We wanted to see something that worked across the 30 markets and gave us a near break-even or positive return. Then we wanted to see that it did that in recent times in a shorter period of time, like 3 months, and whether or not we still had the same results. So let's have a look at what those look like. So this is the test across 30 markets and 10 years of data. So you can see here, it's sort of basically came out break even, which is quite good really, because at some points, looking at here, we've got 6,000 trades on, on average around about 6,000 trades for each of these markets. So that's kind of a good sign that if it can come out break even after that many trades, we've probably got something we can work with, and the drawdown wasn't that horrific on any of them, so we've probably got something we can work with. It's not going to be solid, but if we be a bit clever, and you're going to find out what we did in a second to be clever, then we might make this work. So let's have a look at what this looked like in the shorter period of time. So this is the first 6 months of the year, but I think we also ran it for the first 4 months. That was at the time that we ran, it was the first 4 months. And at this point here, I think we actually made a profit if we combined all of these markets together and ran them as a whole. Okay, you can see here that, now we're a couple of months on, which is part of the testing phase that we entered into. We actually wouldn't have made money if we'd just run all of the markets over that period of time. We would have started to lose money. So how did we come up with a solution to make this work? So what we came up with was something we're calling the portfolio manager. So this is a trading algo that sits across the portfolio of the MT4 account or 5 account. So the way it works is it's got a bunch of settings in it. It kind of looks for a percentage gain or a percentage loss across all markets for a given day. Okay, so once you hit that gain target, which could be like, let's say 1% of the account, then you close all those trades, and once you hit the loss target, which is 1% of the account, you close them all in a loss. So you're going to have gains and losses across the account, but each individual trade is still doing its own thing, right? So because we're stacking these trades, we're adding more and more trades on top of each other, it's more likely that we will hit a target if we have got that momentum going with us. So that's the theory we had, and we wanted to test it out first because it wasn't easy to test, or you couldn't actually back test this. But we thought with the combination of the 10 years being break even, the most recent 3 months being net positive, if we just left it untouched, then if we added this in, we should be able to control risk a bit better and then also get ourselves that growth in the account. So we ran it for about a month and things actually went really well. So probably out of the gate, it was incredible. I'm going to show you what this did and the challenges along the way. It wasn't smooth sailing, but I think we've got there now where it is kind of stable. So let's dive in and have a look. So what we're going to do is jump into the 4 tests that we've been running for the last sort of month and a bit. I'm going to tell you, before we jump in there, I'm going to tell you what the 4 tests are comprised of. So we've used the portfolio manager to give us I suppose a different risk to reward ratio for each test. So the first one, well, in fact, all of them have got a losing percentage of 1%. So we can lose 1%. And then the first test is going to be a gain of 1.5%. The second one is a gain of 2% and 2%. And the third one is a gain of 3%, funnily enough. And then we've got a fourth test, which is, we've called it the free runner. And so this is the basic strategy that the robot is using. So all of them got 1% risk. Free runner hasn't. It's got a free runner risk. It's basically self-managed. We could call it self-managed, really. Okay, so let's dive in and have a look. So this is the 1% test with a 1.5% gain that I've been running on my own account. Now you can see here, it looks pretty average, right? But that's not a true reflection because we did have a bug that did appear in the test at this point here. You can see that there, that big drop. Why on earth did that happen? And I'm going to show you that in a second. So what we're going to do is add a filter in here for max lots. We're going to set that to 99 and click filter. This will update the chart. So this is what the chart would actually look like without that bug. Now the bug was due to the fact that when the platform shut down for whatever reason, and I accidentally turned mine off and there were trades running, then the next trades had no stop loss. And because of the no stop loss thing, the risk on the account was too big and it ended up trying to trade the maximum amount it could, and that got reverted back down to I think about 100 lots or something like that. So it traded 300 lot trades and essentially closed it straight away because it hit that 1% drawdown because of the didn't need to go very far, basically. Okay, so that's what why this one looks a bit weird when you don't have that in. So we fixed that bug. This one also dropped a little bit. That was a weekend gap, so we can avoid that by closing out before the end of the weekend. And yeah, I mean, overall, it was pretty steady growth here. You know, we had some flat periods, which is to be expected, but bear in mind, this is over the course of June. So this started June, and by this time we hit an equity high here, which was 12% gain, that was 25th of June, right? So that's pretty good. So any prop firm challenge would have been passed with this bot if they had a 30-day restriction, Right, so then we've been a little bit stagnant since then, and I did close out these trades manually because I had started trading this on my own account at Black Bull and also with Blue Guardian as well. So that's the 1.5% gain. The 2% gain, what does that look like? Now, this is a little bit higgledy-piggledy as well. So Neville, who's been running the 2% account, he decided to change it, and I'm not sure at what point, to a first of all, he also got stuck with the 100 lot issue, and I think that's why the deposits have crept in here. He also changed the risk, I believe, to 3% risk at this point here. I think it's still going for 2% gain, but 3% risk. So there's an inverted risk to reward here. And yeah, so I believe, actually, that's right. At the start, we had to change the lot sizing as well to get it, or the risk that we were risking per trade, to get it to marry up with the 1 and 2% gains and that sort of thing. So anyway, this account still is in growth. It did at some point reach about 17%, and that was about the same day as well. So he's also running it on a different broker than the myself and Jody, who are running the other two tests. So yeah, bear in mind, this is a different broker, so he's not getting exactly the same trades, because sometimes a broker will print a bear candle on this broker and a bull candle on our broker, and therefore you get a different entry point. So he's entering trades that we're not entering, but it's good to see that overall, even though he is doing that, it's still, you know, in a growth mode here. Right, so next one is the 3%. Now, this one doesn't look flash at all. I don't believe Jody has suffered the 100 lot issue, so these are sort of just one lot or weekend gaps that have caught him out because he's holding the trades longer. So overall, the 3% account is down slightly, just at -3. So going for that wider gain is not working with this bot. So I think the smaller gain tends to be getting us more profits. Yes, you'll get the odd loss there as well, but I think the losses are coming less frequently, and it's able to get that growth. So I'm sort of thinking that if you're going to trade this thing, maybe the 2% or maybe the 1.5 is the way to go. Now, the free runner, this one is even crazier. So in the first 20 days of running it, it managed to make a 37% gain, but then it dropped dramatically all the way back down to 0 here, and it sort of ate up all those profits. And what was happening across this course of this gain was Jody was taking some of the profits along the way. You can see here it's starting to come back a little bit. I believe he's now put a 3% risk stop, a hard stop in it with the portfolio manager. So, and he's got some trades running here. Let's have a refresh. This is what it looks like today. So he's currently up 4%. And I think some trades closed out overnight. So it's looking like it's heading back upwards. But bear in mind, this is kind of high risk, right? So the thinking here is, with a challenge where you needed to pass within the 30-day period, you could probably start off with this. Move to this if you needed a bit more growth, closer to the end of it. And then if you're sort of going for the Hail Mary, then move to this and go, look, I've got 1 week left. I need to really get a huge amount of growth. And you're either going to lose the account or not. Right, so as I mentioned, I'm running this on Black Bull Markets and Blue Guardian, so let's have a look at those. This is my VPS. You can see here we've got the Black Bull Markets live account. We're running the FX Blue personal trade copier on this, and what I do is I use the demo account to place the trades and then farm that out across whatever accounts I need to trade it on. So in this case here, I set the risk factor, which you can see up here, incorrectly to start off with. And the first day of trading, the good news was overall the bot lost, but with Black Bull, it actually only lost it was basically a break-even day. So that was the good news. And then we fixed the risk factor here, got it working correctly, actually increased it as well. And it's now sort of trading normally. You can see here a bunch of blues, and then we had a losing day, and then yesterday was a winning day. So overall for the week, let's have a look. This was the first week that we traded it, and I think it's going to give us the right date range here. Yeah, so overall we had a profit of $60 on that account. All right, so let's dive in and have a look at the Blue Guardian account. Righty-ho, so here we are. We've got the Blue Guardian account in front of us. So you can see here that we had we actually had a bad issue with the copying at the start, and on the first day it shouldn't have dropped this far, but that's how far it dropped. It was at that 0.7 mark, which we currently are at now. It should have been at 0.3 because I did reduce the risk, but because of the way the bot trades, the first trade is much higher. It was double the size of every other trade. And in fact, what happened was the way it was copying across, it was just putting all of the trades at the same size. And because it lost, it means the loss was much bigger than what it would normally be. So that was the issue with the first day of trading, which we've now got to clear ourselves out of. Then the next day, I think, was a loss, and we managed to get the risk sizing correct, and the next day was a win, which brought us back up, and then we had another loss, and then we had another win. So, we had another loss, and then the next day was a weird one. We had a losing trade, which wasn't closed out by the portfolio manager, and then I decided to close out some trades manually. In hindsight, had I left it running, we probably would have been a little bit higher because that market did turn around and would have given us profit. So that was a mistake by me, but the ones that I did leave running were profitable anyway, so we did get that 1.5% gain on this account. So hoping next week that this thing carries on and we get a few more wins and we can sort of bring it back up to here. I'm only risking 0.3 of the size that I'm risking on, it's really 0.3% on this account. So what I might do is when I start to see a bit more growth and a bit more performance is slowly increase that up, and hopefully as we get close to the target, we can hit it even quicker. So we got the unlimited challenge here, which is good. So we don't have any time restrictions, and I have set the Guardian Protector on here for 1.5%. So that means that currently it's looking at a 1% loss and then we'll get out. But if something went wrong, then this would stop the bot from going crazy. Not that we're going to have the 100 lot issue again, but if it was an issue, that would stop it anyway. So that's where we're at with this. Now, if you do want updates on this, what I'm doing is dropping a weekly video on the channel where we've got 4 other traders and myself, and that may expand and contract, going through the challenge. So you can see who's leading that over there on Trading Nut. All right, if you want to get involved in this, here's what you need to do. All right, folks, now, if you do want to get your hands on this bot, the bad news is that it's already locked away with my Robot Lab live members. So unfortunately, it's not available to the public. Now, the good news, though, is that you can jump in for future builds. If you want to be involved in this, then there's some easy pathways in. I'm going to show you them right now. So to start off with, the first thing you probably want to do is, if this is completely new to you, you've never traded with a robot before, is to check out my free algo and training. So what I've got here is a trading robot you can install into your own MetaTrader 4 platform and see how it all operates, and even, have a back test of it, have a play with it, try and come up with some settings that you think are going to work, give it a go. So the second thing that goes in there is some free training. So I actually show you how I build out trading robots without doing any coding at all. Okay, so if you want to do that, it's completely free. Jump in there and check it out. The second thing, if you really want to step up, is to check out my Robot Lab Live. So this comes with a $1 7-day trial, then it's $19 a week after that. And every week we're jumping in there, recording a live stream. You guys can interact with me on that live stream. We're building out a strategy from the beginning to the end. So we've got the strategy, we've got the build part. You're going to see me building an FX Dreamer, the tool that I use to build out trading algos. And you're also going to see the testing part as well. And to the point where we get to now, like with this current bot, where we've built the whole thing out. We're actually demo trading it and looking to get it on trading prop firms and personal accounts as we're doing now. So this is Robot Lab Live. Go and check that out if you're looking to just dip your toe in the water. Now, if you want to take things to the next level, then check out my Robot Builders Club, where I've got a full course on building trading algos. So this is from start to finish. You're going to learn to build virtually anything you can dream up. We use a tool called FX Dreamer, which is a drag and drop WYSIWYG, which allows you to build anything without doing any coding at all. Now, July is a perfect time to join. We've got a promo on here. You're going to get a 25K Blue Guardian unlimited time evaluation with your membership. And there's a whole bunch of other bonuses that come on board. And there's also a special coupon if you hit me up in the chat. All right, folks, so there we are. Now, I'm going to leave you with one little task, which is to tell me in the comments if you think this strategy is going to be sustainable going forward, this approach with the portfolio manager, taking percentage gains versus percentage losses. I want to hear what your thoughts are. Is this something you think is going to work in the future? Love to hear your thoughts. Drop a note in the comments. And if you're looking to jump on board, then all the links are below in the description. Right, folks, I'm here at the Black Bull Markets headquarters up in Auckland, New Zealand, and I'm standing in front of their whiskey bar. Now, if you like that kind of selection, you're going to love their 26,000 tradable assets from Forex, cryptos, indices, stocks, you name it, they've got it. So, folks, go and check them out at blackbullmarkets.com or click the link under the video or in the card above.